Well, hello there. It's Monday. It's August 12th. It's the first day of school for my kids, and it looks like summer's almost over. Sorry, it's still early in the morning here. All right, let's talk about the futures. The futures are down right now. More escalation, more trade war worries. As I said, we're in twilight zone. Twilight zone meaning we're between the 200-day moving average and the 50-day moving average. And it doesn't look like we're going to go higher anytime soon. It looks like we're just going to drift between these two levels for a while, and we're going to see more volatility. So here are the things we're dealing with. Let me give you, I kind of wanted to put it all out for you in a Word doc so you could see exactly what I'm looking at. Overall, earnings are pretty much over. General expectations for S&P earnings growth are 3% higher for 2019. Now, that's sharply lower than 23% in 2018, but that's been priced into the market already. So the market's believing that we're going to be 3% higher, which is substantial because it gives us something to look forward to. Bearish factors, there's a lot more bearish factors. Comments from Fed Chairman Powell diminishes speculation the Fed will aggressively lower rates. Remember what he said? We're not lowering rates for the remainder of the year. He should have done that now, not when the market was making a 52-week high. I said it then and I'm saying it again now. And again, we're going to have a slower economy and we're still having U.S. tensions with China. Now, the longer these tensions take place, the more the market will take all of it into account. Okay? So that's that. And we're about 3 to 4% undervalued right now in terms of what would happen if these trade wars didn't go away. Also, let's look at the earnings calendar for the remainder of the week. Not much happening beginning of the week. We have CPI, which is not that big of a deal. Import, export, not that big. Jobless claims. Jobless claims are huge. That's happening Thursday. Prior was 209. Consensus is 208. It doesn't look like we're going to be higher or lower. It looks like we're going to be right in the range. The 4-week moving average has been 212,000. In the summer, we don't see big changes typically, not in this quarter, so I'm not expecting a massive change. If you see a number below 200,000 or above 230,000, that's an interesting number. But anything around 210, 220,000, 205,000, that's all in line with estimates. So that's number one. Number two, retail sales. Big report. Remember, retail sales account for 2/3 of the economy, of the GDP. So it's a very important number. Again, numbers are in line with estimates. There's nothing really strange here. Anywhere from negative zero point 0.3 to 0.05. Nothing really that drastic. And keep your eye on this number. It is significant. All right. Anything outside of this number will have an impact on the market. Another one, industrial production. Thursday's a big day for numbers. And again, keep in mind, don't look at the actual number. Look at the consensus. Look at the range. Look at the estimates in line with the actual number. If the actual number is in line with estimates, you're good to go. That's what everybody looks at. That's what the big traders look at. They don't look at the number in isolation. They look at the number in comparison to the estimate. The estimate is the big deal and how far it is away from the estimate. All right. And lastly, Friday we have consumer sentiment and housing starts. Housing starts is going to be big because that's a big impact on the economy. Not as much as retail sales, but it's big. Again, consensus 1.26 million. Range is right in line with estimates. If the number is between 1.210 and 1.280, it'll be in line. Again, don't expect a lot of volatility. Expect a tighter range and expect volatility to begin towards the end of the week on Thursday and Friday as we have jobless claims, productivity, and retail sales and housing starts. Anything with a red mark here is fairly important. Green, not so much. Red, very important. Just click on the consensus, and you'll see what the estimate is in comparison to the actual number. Again, looking at the E-mini, the key number you want to look at is this level right here above the 50-day moving average, which is at 29.46 or 294 on the E-mini. I'll talk to you guys later. Take care.